Today's market is moving in two distinct directions. The Nifty and gold are pushing sharply higher, while the IT sector is in a freefall. I'm your host for the April 18th Mint Executive Briefing. Domestic indices are holding their gains today, even as global markets face significant selling pressure. The Nifty 50 is up 0.65% at 24,353, supported by an advance-to-decline ratio of 3-to-1 across the broader exchange. This broad participation shows that localized buying is currently offsetting the downward pressure seen in international benchmarks. This chart tracks Wipro's nearly 3% drop today, making it the top loser on the Nifty. Management announced a 15,000 crore rupee buyback, but that cash payout failed to mask the persistent drop in their core revenues. Capital fleeing tech is landing directly in consumer goods. Hindustan Unilever surged nearly 5%, acting as the primary engine dragging the broader index upward. Traders are also stacking positions ahead of Q4 bank earnings. Expectations are dialed in on HDFC, projecting a 9% rise in net profit and a 6% growth in net interest income. The market is actively rotating capital from growth-capped tech firms and into the high-yield safety of FMCG and banking heavyweights. This chart shows the scale of the recent gold price shock. Prices have spiked by 5,000 rupees in exactly 2 weeks. That extreme cost is directly impacting retail habits. Heading into Akshaya Tritiya, consumers are abandoning these traditional, heavy gold pieces in favor of lightweight alternatives. On the energy front, India secured a critical geopolitical margin. The U.S. renewed sanctions waivers, allowing these Russian crude oil tankers to continue supplying the Indian market without penalty. Meanwhile, strong execution pipelines are driving a localized boom in the power transmission sector, pushing stocks like Power Grid up nearly 2%. High commodity prices are clearly squeezing household budgets, but aggressive energy diplomacy is successfully shielding the broader economy from major supply shocks. In corporate news, Tesla is preparing to launch a 6-seater variant of the Model Y, targeting the premium family SUV segment in India. The government has also clarified that viral WhatsApp messages regarding new RBI rules for exchanging old 500 and 1,000 rupee notes are completely false. Over 80 flights were canceled today after an IAF jet crash-landed, shutting down the primary runway. And discussions around the 8th Pay Commission are accelerating, with proposals pointing to a basic pay fitment factor that scales from 32,000 to nearly 69,000 rupees. Local disruptions and viral misinformation aside, those structural wage hikes provide a reliable baseline for sustained domestic consumption. Looking at tomorrow's session, this diagram outlines the primary tug-of-war. We have a strong market floor built on expectant green banking metrics, colliding directly with inflation risks triggered by Iran-US tensions. Given the persistent drag from the IT sector and the risk of sudden geopolitical headlines, traders should maintain exceptionally tight stop losses. To keep your portfolio aligned with the facts, hit subscribe for daily data-driven insights. In a volatile market, ignore the social media rumors and execute trades strictly on verified data and solid earnings fundamentals.